Last week, Jerome Powell gave the United States our first rate cut in almost a year. Some thought this was maybe the beginning of a lot more rate cuts, and it does appear based on the Fed's dot plot that yes, they want to continue cutting rates. However, Jerome Powell kind of switched that tone here on the day. Today, we're going to be talking a lot about what Jerome Powell announced about what's happening in the market and some of his very big concerns and what could really lead us into the bigger problem of what we've been trying to avoid for what seems like the past 2 years, stagflation. So we're going to talk about where the S&P 500 is, how we're reacting, and ultimately how we're going to be moving forward from this over the next few weeks, if not months. Now, again, it is worth mentioning September, October are historically some of our worst months in the market. I want to make that abundantly clear. These have been historically some of the worst months possible for us. As of right now, September's been a pretty good month. The question is can we get a little bit of a pullback? And I would actually love to see a pullback in the market going into October so we can get that heat up into November and December, which we've kind of grown to love, right? That's happened like the past 3 to 4 years. It's been awesome Decembers. So let's see if that will continue. But let's really jump into this first of all. The first thing he talks about is the signaling that interest rate cuts are not guaranteed moving forward, although in the dot plot he acknowledged is signaling that right now. It's worth mentioning some of the things that we need to be discussing as well as something like the S&P. And it's something that I continue to say. If you move up fast, you can move down just as fast. And if you look at the 15-minute, it may not look that fast. But if you go to the daily, you are moving up fast on the S&P 500. And I still think you're in an area of, you don't really need to be too worried. But if you start breaking below like 659, this could start dropping to 652, 646. In a hurry. If you go look at something like NASDAQ, which just hit some of our biggest levels, 25K on the NASDAQ today and yesterday, you don't have a lot of liquidity back down into 24,300. So this is very important of what we're going to be discussing because we could see a moderate-sized pullback into October based off of what's being told to us right now. So let's jump right into that. Before we do, though, I want to say if you want to see how we trade, what we trade every single day, the Discord link is down below. You get a rundown every single morning in Tyler's Zone going over the futures, what we're expecting there. And some days you're only going to get futures action. Like for me today, that's all I did. I traded really no equities, but you get our watch list as well of what's happening here as well for our favorite stocks. Jordan goes deep into this as well. Our swing trades and trade ideas, exact option entries, what we're looking for, where we're targeting, etc. Technicals, more of our scalp setups, intraday, maybe an overnight. But again, all that is highly detailed as well. But again, if you are interested, the link is down below. You can see some of the profits as well. The Discord link is down below. But we have tons of free content, so you should never feel pressure to join if you want to get content, right? I post multiple times here on YouTube, Twitter, etc. So make sure you're just taking advantage of the free content if you want. So again, going into the NASDAQ of where we're at, okay? Now, you look good, and I don't want to start sounding the alarms of we're bearish. I don't want to say that because in order to really get bearish, you have to start making a bearish move. And as of right now, you're making higher highs and higher lows. And so I think it's important we start with this fundamental viewpoint before we go into anything else. And I don't want people to misinterpret what I'm saying. So that's all there right in the beginning of the video for you, okay? ES, very similar. The S&P 500, grinding the 50 MA, looks really good. One little red bar here so far. Now, going into this, what are the fears of what's happening? Now, Jerome Powell, and I brought up 2 articles regarding this. He stated the biggest fears right now are, number one, hiring has clearly dramatically slowed. That is clear as day. There's no question about it. He's also stated that, in his words today, that the economy might be overvalued, right? Basically saying we're at a very high rate. It may not make sense where we're at. His words, not mine. So very, very important. It is time for the Fed to act decisively and proactively to address the decreasing labor market dynamism. I'm not going to lie, I've never used that word in my life. And emerging signs of fragility. Like being fragile. Again, crazy words. Kudos to you, Jerome Powell. Can't even pronounce these words today. We are at a serious risk of already being behind the curve in addressing the deteriorating labor market conditions. Should these conditions continue, I am concerned that we will need to adjust policy at a faster pace and to a degree of moving forward. So, again, this is a common theme of what the Fed kind of said a few years ago, right? And I've said this plenty of times. I think Jerome Powell has been very honest, almost to a fault with people. Now, he may have not always been right with what he said, right? As far as inflation being transitory back in 2021 to 2022, right? Okay, he wasn't right about that. But he told you his plan, what he was going to do, when he would cut. He didn't really deviate from that. Some people can say it's political. It wasn't. Like, he did exactly what he said he would do. Just did it again. Now, when you read these, he cites both sides of the argument because, again, we have to understand the mandate of the Fed operates in 2 degrees. Obviously, you want to have economic stability, but you also have to understand their main goal is maximum employment, right? You have to keep the job market stable. People have jobs, the economy will inherently survive typically. You might go through stagflation, but as long as people have jobs, things don't really go for the worst. People start losing their jobs and companies can't hire, things get bad. Now, he has also accounted that for the reasons of slowing overall job hiring, et cetera, employment, obviously going down, unemployment going up. Number one, and these are all theories. These are not factual, which is very important when you listen to Jerome Powell as well. They're not just jumping and say, okay, well, that's fact, that's fact. That's not what's happening. You have to actually dig into what he's saying and actually listen to how he's answering these questions. And it has become increasingly clear that they are not positive on what's going to fix the market. And I know you think to yourself, well, if they're not positive, well, then who is positive? Yeah, I know. Concerning. So, again, their fear right now is that they don't cut more, that unemployment goes up even higher, which could be a problem we get towards 5%. Now, the other side of this is does inflation get stickier and stickier and stickier based off of tariffs? Now, another stat that we've seen from them as well is that inflation from tariffs is not directly being passed down to consumers. Their words, again, not mine. So they've said a very minimal amount, okay? Very important to understand that as well. And that's probably why you're seeing unemployment tick down, because this is going straight at those companies. And again, a lot of these companies are trying to stay in good graces with Trump. So it's a catch-22 across the board. This policy stance, which I see will modestly restrictive, leaves us well positioned to respond to potential economic developments. Again, why they cut so small. Now, again, I think it's important to understand the market is totally pricing in more cuts. There's no question about it. 100% we're pricing in more cuts before the end of the year. If the tone continues to switch towards the area of not wanting to cut, the market will get some pain. The other area you're seeing this with is mortgage rates right now. And you can look at this as Mortgage News Daily. It's what I've used for the past few years to track mortgage rates. You can go to FHA 30-year. I used to use 30-year fixed because probably what most people use. But again, you can see, and this applies to most people in the United States, FHA is going to be slightly lower. As always, it's like right at 6%. So 30-year fixed mortgage, you can see as of recent, we've obviously been dropping down. Now, I think it's also really important to mention that last year we saw a similar move back in September. It dropped to 6% when we cut, and then you spiked back up because we never cut again, and now we're back there. So the question here is one, do we continue cutting? Number two, is can mortgage rates continue to drop? And I want to highlight, and I harp so much on mortgage rates and what's happening with the housing market because this really is one of the biggest things overall. You need to understand, if the housing market looks good, traditionally the market does very well. And that's not just my words. Just go look back at statistics, back at previous data of how the market's moved in the past. And I think past is usually one of the best ways of understanding what's going to happen if X, Y, and Z happens is how did it respond previously. So that's really important. And we're mentioning mortgage rates are still like lower and lower despite where we're at with rates. So very important to mention that as well. Now, the other thing you're seeing here is, again, I like to stay on high time frames so you guys can see, and I'm not trying to make you panic, and you still look really good, because at the heart of this, I still am very bullish, okay? I want to make that abundantly clear. But you can still see that we're trying to get a little bit of drawdown. Now, again, in order to actually get bearish, what has to happen is you have to break the overall bullish structure, which a bullish structure is, in the simplest terms, is making higher highs and higher lows. It's really that simple. I know I might be oversimplifying here, but that's really what it is. Making higher highs and higher lows. And that's all the SPY, this is an hourly chart, that's all the SPY has been doing, really since go all the way back to like the end of April, right? That's all you've done. So in order for me to really get concerned here, go like a 2-hour or 4-hour, can we at least start breaking back below like 654, 656? Like that's where I would start to maybe flip a little bit of a short-term switch. But really got to get back below the 50 MA, backtrack near the 200 SMA. We break below previous all-time highs. Like you've created so much separation now that you have a lot more support. So those are things that you should be understanding and looking at as well. Not just saying, okay, well, Powell says this is concerning, this is bad, the market's going to crash, it's a bubble. If I told you how many times I've read my chat from these videos and people say, guys, it's a bubble, Tyler's leading you to the slaughter, I'm like, first of all, I'm just telling you what's going on. Second of all, good luck being bearish right now. Good luck being bearish. There is no special price also for going short first. There is no price. Some people may try to convince you that you get these cool social media points and people will just, oh yeah, awesome. Now, granted, if I make a video calling for a top and tomorrow we dump, I'll probably get a lot of views. I probably will. But I don't think that's a good notion and a good agenda to push with people because that's not really trading. That's gambling, right? You are doing a form of gambling with the stock market, don't get me wrong, but it's a lot more educated when you start putting in actual reasons and logic and actually creating trade plans. But when you just make videos and just say things, anyone can do that. It takes no skill whatsoever and really has no logic or merit behind it, and you can't really explain what or why you're doing it. Congratulations. So very important to understand that of where we're at and how we're moving right now. Now, all that being said, you're kind of just where I thought you would be. You're kind of where I thought you'd be here on the day. And you're kind of breaking down a little bit more here. You're losing a little bit of a level here. And again, bright and early this morning, I like using Discord as an example because it just tracks everything that I talk about throughout the day, and I can just go back and show you live stamps of it. So bright and early this morning, as we were pushing near all-time highs here, 25K. Over all-time high, that's where you're looking for price discovery. Under 24.97, we're looking for 24.89, then 24.810. As you broke, obviously, below that level here, 24.97, you rejected, and then you rejected, dump down again to our level, and that's where we're at right now. Now, beyond this, you start to get into another area where we kind of just ranged, and this is pretty unfortunate, but we basically ranged from 24.8 to lows of like 24.65 for give or take almost a week, give or take. So we'll talk more about that as well. Don't love to see it, but it was like 3-4 trading days right there. So that's where we're at now. I would love to see us stay back above 24.82, but that's kind of what to look for right now. Dow also getting a bit of a pullback as well, getting back below that previous all-time high, and this is kind of a going trend, and Dow was really the lagger when you look at what's happening here with indexes, getting back below that level. Another thing is the Russell RTY, mid caps. A lot of you guys love trading mid caps. You're not at all-time highs yet. IWM did hit all-time highs, but RTY is not there. IWM giving you a visual. You're kind of sitting there right now, kind of rejecting also a little bit of a triple top. You get above 244, looks really good. I still think it looks really good right now as well. But that's where you're at. So very important to understand how we're moving, why we're moving, and kind of where that breakout potential is. And it's also important here is like despite there being this concern, the Russell and IWM looks really good. Like IWM here, like you're at that breakout. And we've seen historically like what type of moves you get when the Russell breaks out. Taking you back to 2020. You have to go to 2020, 2021. Okay. I don't know about you guys if you remember this, but this is when SPACs were big back early 2021. But when you broke that very similar structure, that little triple top kind of forming out here, you broke here November 2020 into the beginning of 2021. That's when AMC, you had GameStop, every mid cap went bananas. Upstart, all those names went just crazy. And you could be getting back to a scenario like that. So it's very important that you weigh in your emotions and you understand where you're at and how critical some of this can be. Now, again, you're not at that point to where you start slapping and hammering and YOLOing calls because, again, you're at that spot right now. You need to break them out. And, again, this is a weekly chart, so you can see this happen literally for weeks of upside. So I guarantee you're not going to miss out if it gets the breakout. But very important to understand that because this is where we're at right now. So despite seeing some bad news on Twitter and social media, you can take a step back and be like, okay, well, this is actually one of the most critical points that we're at. And if we continue cutting rates, it's likely that IWM breaks out. If we get a pullback in October, this has to be a pullback that I'm really looking to get aggressive on, that I'm looking at from a viewpoint, okay, if we start actually getting a buying opportunity, what's the reward potential? Like, is this potentially a 2021 scenario? Are there a lot of names still undervalued? Like, remember Apple back down at 220? When we were saying, okay, the rest of the Mag 7s at all-time highs, why is Apple not close? Why is Google not close? Well, those names are exploding now, right? You know, Amazon, I can go down a laundry list of names, but you have to keep your eyes open. You have to be looking forward at what could be happening, creating trade plans, understand the reaction of what you are going to be doing if the market does X, Y, or Z. And that's why it's so important that we do these rundowns. We break down what's happening. We break down what the Fed is looking for, what they want to see as far as data and everything in between. Because still this week, you still have to get PCE data, I believe, on Friday. Very important. That's going to be coming out. That's the biggest thing, I think, this whole week. But still, those data points are very, very key. He mentioned GDP as well, about what was happening with growth and then how it's pretty much moderated, nothing really crazy going on there. So important to understand that. If you have any questions, let me know down below. It's my opinion. Follow on Twitter, Discord links down below, all that. Have a good one, traders. See you later today.